Hi guys, welcome back to another video. Today we are going to be having a very interesting topic, which is the best strategy for scalping using the order flow. All right, that's what we're going to talk about. So your stop loss can be between 5 pips, 10 pips, 7 pips, something like that. It can even be less than that. So because it's just scalping, all right, and also, day traders can also use it, all right? So you can gain between 30, 40, 50 pips, all right, using this strategy. And it is very, very simple because it only has 2 steps, all right? Just 2 steps. The step 1 is looking for liquidity. The step 2 is looking for either big buyer or big seller, all right? Those are the 2 steps that you need, all right? So I'm going to show you now. I'm pretty sure you know what liquidity means, all right? It's just something like this. All right, let's say we are having buyers coming in here. So we have the last buyer here. Then the price retraces and the price goes up back to take out this high. So we are having liquidity on around here. So here we are going to be looking for either we are going to be looking for both buyers and sellers here, but I'm going to explain it, all right? I'm going to explain it. So we are going to be looking for both buyers and sellers here, then the price will just retrace. So you are going to be selling from here down here. So the first step is looking for liquidity areas and marking it out before the price reach there. Then the second one is you going to your order flow to check it out. So let's go into the practical session. I'm going to show you an MT4. So looking at what we have here now, all right, if you look at this is about 3 days ago, all right? So you could see that there is an eye created here around the Asian session. So the price retraces go up and boom, the price went up back, taking out this eye. So we are having a liquidity here on here. So whenever the price creating an eye, you mark it out, all right? You mark it out and you wait for retracement into that eye, all right? Just like another example here, you can see the high, marking it out here, the price retraces, taking it out, boom. So a trade here and a trade here. Now you can see this low, marking it out, the price retraces, taking out this low, boom, marking it out, all right? So a trade here, a trade here, a trade here. So I'm going to show you these 3 trades, all right? How you are going to enter. So the first step is just marking the liquidity point. Then the second step is going to your order flow to check what's going on there. So let's go back to the order flow. So this is our first trade. All right, this is our first trade. This is where the liquidity on took place. But let me show you where it all started. So it's really long here. All right, during the Asian session here. So we have an eye here. So I mark the eye. All right. After marking the eye, what are you gonna look for? You're looking for a buyer coming in and a big seller coming in. A buyer coming in and a big seller. So a buyer should be the one to take out the liquidity, not a seller. So a buyer should be the one. Sometimes you can see the sellers here at the top here, but in this case, we want the buyer taking it out and a big seller coming in. A seller ranging from probably 10% to 20, 30. Those ones are cool, all right? We don't want small sellers, all right? We want the big guys. So in this case now, we can see that the buyers taking this out, so which is something that we actually want, all right? Then the next candle, what does the next candle say? The buyers are 13%, the sellers are 1.9%. So we don't really want this, all right? We want a big seller, so we are going to ignore this. We are going to ignore this. Then as the price continue, reaching the high again here, so we can see that we are having 6.4 buyers, all right, 1.3, then we have 36, all right, minus 36% of sellers, all right. This here is our go ahead button, all right. This is our go ahead button. So what are you going to do in this case? Now you're going to enter after this candle, which should be here at the end of this candle. Then you put your stop loss above this candle. Your stop loss is going to be above this candle because you are protected by the sellers. So anything making them going higher, that means they want to take another liquidity. And I'm going to show you how that one works, all right? So you put your stop loss above the candle, and your entry should be at the end of that candle because it is at the end that you will know the actual figure or that will be here. So let's say you have your stop loss here, your entry is here. So the price consolidate, and boom. All right, and boom, you can see how it all went down. All right. So this is a lot. All right, this is a lot of pips. All right. So that is how you do it. Let me show you another example. All right. Let me show you another example, which is the second example. You can see a century chart. All right. So this is another example. Let me remove this. All right, this is another example. So we're having a liquidity here. We're having a liquidity here. Then the price retraces, then going back to take out that liquidity. Remember, the first rule is mark out the liquidity area. Then after marking it out, if it's going back, all right, you want to see the buyers taking it out. So if you look at it, we are having the buyers there, 15%, 17%. Wow, this is good. Then the sellers, a very big sellers, above 10%, all right? Then the big seller coming in now, you can see minus 20%, all right? This is a go ahead. So you enter at the end of the seller's candle, which is here, you put your protected stop loss above here, all right? So when you do that, so this is going to be how many pips? 60 to probably 68 or less than that, or 67. So this is about 7 pips, all right? This is about 7 pips stop loss. And boom, look at what happened. Boom, all right? You are having your trade. You're having your trade, a very, very good one, all right? Then the third one is this. All right, look at this low. Look at this low. Remember, I said it's scalping strategy. So look at this low here. All right, look at this low. Then you mark it out. Then the price retraces back to the low, taking it out. All right, it must take it out. So taking it out. So you want to see the sellers taking it out. You don't want to see the buyers taking it out because you want to buy. So now all the sellers that were taking it out. And again, in addition, whenever you see a seller, a lot of sellers in one area trying to sell, but they were not able to sell, those sellers are going to jam. I'm going to make a video on that video. So we call them the jam traders. So here the sellers were jammed because they were trying their possible best to sell. You can see minus 14%, minus 10%, minus 11%. These are big trades, minus 22%, but the price is not moving, so they were jammed. Where is the buyers coming in? So you can see that after this minus 5%, we can see 16%. So remember I said from 10% and above, all right? So we are having 16%. So this year is our go ahead above this candle. That is our entry at the end of this bullish candle. Then our stop loss will be here. So this will be something around 1944, let's say 1943 to 1941. So this is like 2 pips, 2 pips stop loss. And boom, all right, you still have more than 1954. So that is a lot, all right? That is a lot. So you can scalp using this strategy. I've shown you 3 examples. So let me show you another one in case if the conditions is kind of different, all right? So I'm going to show you this one. So guys, I've shown you this, all right? If you remember this foundation session, I showed you this, another sellers, and I showed you this, all right, for the buyers. So now let me show you another one. Let's go to another pair. Let's go to GBP USD. So let me show you this, all right, because this one is kind of different, but in case you are presented with something different, you should be able to handle it. So let's take a look at this, all right? This previous this I was taken out. So let's go to our other. All right. All right. So now this is the first I, all right, of the previous day. Now, so I marked it and put it in an array so that it's going to extend. Now, the next day is this here. Let's go. All right. So this is the next day. All right. This is the next day. So you're going to see something a little bit different here, but you should be able to undo it. All right. Now let's do it together. So this is the next day. All right. So you're looking for the buyers taking out the I, all right, that you marked. So here you're having what? Give me a sec. All right. So here you're having the buyers coming in. All right. You can see another buyers here. Here we are having 8.93% of the buyers, all right? We are not interested in others one. So look at this, 8.93%. on this candle here. Yes, on this candle here. So we are having buyers 8.93%. So we are looking for a very, very big sellers, like, 10 and above. All right, that's what we are looking for. But unfortunately, we're having 9.2%, and our rule says 10 and above. All right, we don't want that. So since the next candle does not present us an opportunity, then what do? We can go to the next candle. All right, we can go to the next candle as long as it's not a long candle. We don't want a very, very long candle. All right, and if it is a long candle on the second candle, yeah, it's good, but the third candle we don't want. So let's say we are choosing this, all right, which has minus 31%, and we made an entry at the end of this candle. Guess what happened? Boom, immediately you have a reversal, and it's taking us out, probably like 45, 2450 to 2455. So that is around like 5 pips, all right, 5 or 6 pips. So it's good, can take stop loss, but it doesn't affect us anything. So once you are sure that the price is still going to, because we are still above the high, and you know what you are doing, the next thing you are going to do is marking out the next high above the buyers. All right, this is where the buyers were trapped. All right, so you want to see another buyers being trapped above those ones they were trapped before. So this is the ones that were trapped before, right? So I want to see the buyers that will be trapped again. So I'm going to do this. I'm going to mark this, and let me use a line. All right, so something like this. Yeah, this is fine. I hope my line is straight. All right, so this is the last buyer. All right, so you want to see the next buyers coming in here. Now we are seeing the buyers coming in here. You can see we are having 32%. So this is a good thing, all right? So we should be happy that we are having 32%, and we're having 4.8% of buyers again here, which is also good. Then the next thing we are having is what? Minus 25%. All right, this 4.8 is the last high of buyers. Now we are having minus 25%. The second candle after the buyers. All right, this is the rule. You can see every examples that I showed you. It's actually the second candle. All right, so the second candle after the buyers were stopped out, that is what you are looking for. So it should be 10% and above, all right, like 15%, 20%, 25, 30, those ones are good. And here we are having minus 25%. So here is your go ahead. This is where the sellers are. So you want to use them as a shield, all right? So you're going to put your stop loss at the above their candle, and your entry will be below their candle, all right? You can also look for retracement, blah, 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 you can do all those things. But let's say you are entering at the end of their candle and putting your stop loss above their candle. All right, so this is the shield. And look at what happened at the end. Boom, the price came all the way down here, then started consolidating, then started consolidating, but it's never taking out the eye again. It's not even coming close to here. So I removed that line, and I'm putting a rail line here. So this will extend, all right? So we want to see if the price is taking us out, all right? And look at it here. We can see this is our entry, all right? These are stop loss, and let us follow the entry. Let's follow it. As you can see, the price was retracing and consolidating around the entry. Boom, started selling from there. Just sell, 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 sell. So this is a very good thing to know, and it's a very good way to scalp, knowing where the sellers are coming in and using them as a shield to make your entry. So I hope you guys learned something today, and I hope you guys get something you can be able to put it in your work and probably change and end with it. So thank you for watching. Make sure you subscribe and like and share the video. I'm going to see you in the next video. Bye.